guys, welcome back to the channel. I'm Michael Studebaker, and today we're going to be talking about and discussing everything you need to know about taxes and filing taxes for your cryptocurrencies. So, if you haven't already, please subscribe, like the video, and hit the notification bell if you want to see more on personal finance and investing. Now, let's get straight into the video. So, first off, disclaimer. I'm not financial or legal or tax advice, just an opinion. I'm not an expert. I do not guarantee a particular outcome. I have no inside knowledge. You need to do your own research at the end of the day to make your decisions. This is just basically education and entertainment purposes only. Investing and trading in cryptocurrencies is risky, as anything can happen at any time. So, without further ado, we're going to be starting with what crypto actions are taxable events in the United States. Well, capital gains tax events involving cryptocurrencies include selling cryptocurrencies for fiat currency such as US dollar, British pound, Japanese yen, etc., using cryptocurrency to purchase goods and services, trading or swapping one crypto asset for another, either on an exchange or directly peer-to-peer. Income tax events include receiving cryptocurrency from an airdrop, any crypto interest earnings from decentralized finance, DeFi for short, lending, crypto mining, income from block rewards, and transaction fees. Crypto that's earned from liquidity pools and staking, receiving cryptocurrency as a means of payment for carrying out work, including bug bounties. It's also worth noting that any losses incurred from trading can be used to offset your capital gains, as well as deduct up to $3,000 off your normal income tax, depending on how long you've held the assets for. Now, any additional losses can be carried forward to the next tax year. You do, however, have to show a loss across all assets in a particular class to qualify for a capital gains reduction. So how much tax will you pay? Well, in the United States, how much capital gains tax you owe for crypto activity depends on how long you've held your assets and in which income tax bracket you are. This is divided into two parts. Short-term capital gains, which is any gains or losses made from a crypto asset held less than a year, are taxed at the same rate as whatever income tax bracket you're in. So any losses can be used to offset income tax by a maximum of $3,000. Any further losses can be carried forward as mentioned previously. So long-term capital gains, which is any gains or losses made from a crypto asset held for longer than a year, incurs as much as lower 0%, 15%, 20%. So losses from exchange hacks or thefts. The significant changes to tax law from December 2017 confused many crypto investors who have been subject to scams, hacks, other ways to lose crypto investments. The amended law limits personal casualty losses to a federally declared disaster. So crypto investment losses are not personally casualty losses. Instead, they're classified as investment losses under tax code 165 because there are transactions entered into for profit, though not connected with a trade or business. So as a result, all crypto losses in scams, thefts, or accidents are complete tax losses. These losses can be claimed on Form 8949 as $0 proceeds transactions. This means that if you bought one Bitcoin for $15,000 and it was stolen through an exchange hack, you'd be able to report a loss of $15,000. So how to prepare for crypto tax season? Now that you know how your crypto assets are taxed, here's what you need to do in order to prepare, file, and pay your taxes. So remember to keep a record of all your cryptocurrency activity. The IRS requires all crypto users to keep an accurate record of all cryptocurrency purchases and sales, including airdrops, lending, interest, and all other activities mentioned previously under capital gains and income tax events. So most lending exchanges and platforms have built-in tax reporting features that automatically generate reports for you, which is very convenient. So calculate your gains and losses. So once you have full transaction report, you can use a number of services or tax calculators to work out what you owe, or you do it manually depending on how many trades you've made in the year. The amount is found by finding the difference between the price at which you sold and the cost basis, so which is the original price you paid. You fill in the form 8949 and add it to the form schedule. D form 8949 is specific tax form for reporting crypto capital gains and losses. The Schedule D form is the main tax form for reporting overall capital gains and losses. Any cryptocurrency earned as an income needs to be added to Schedule 1 form 1040, and self-employed earnings from crypto needs to be added to Schedule C. Submit forms and pay any taxes owed. So crypto tax services for U.S. citizens. So here I'm just going to be listing the following platforms that offer a range of crypto tax services, and they just take care of the entire process for you. So there's Coinly, Token Tax, Coin Tracker, TaxBit. Those are just many of the on the list. They do so many for you. They advise and they just give you a lot of help from professional tax accountants. Also, they just help you with a lot of complex crypto tax situations. And it's just very advisable if you have a particular situation you're not sure about and you need information by them. But I just wanted to say that this video is only for informational and purposes only, and should not be construed as tax or accounting advice. Always seek professional guidance from a tax accountant when assessing your individual tax situation. So just keep that in mind. But anyways, I hope you guys enjoyed the video and found it helpful. If you did, please subscribe, like the video, and hit the notification bell if you want to see more on personal finance and investing. So I hope this video helps clear some of things up and helps you understand what you guys need to do for your crypto taxes and if you need a file or not. Remember, consistency is key and hard work pays off. Thanks guys, I'm Michael, and I'll see you guys in the next video.